Good afternoon, everyone. It is April 15th, 2024. Um, we finally are getting a rollover in the market, if you want to call it that. I noted last week that, I think it was a week ago or something, maybe it was a week before that, but I noted that this week over here on April was the first time breaking a prior week's low all year. You can very clearly see that. This is the external trading hours, but anyway, uh, firmly breaking the prior week's low. The following week, closing below the prior week's low. We sort of got that on that first week as well. But overall, like a very clear shift in the market momentum, if you want to call it that. And I mean, that's not unreasonable, right? If you look at this has been a crazy run up. This has, I think, been 30% or something. 30%, just about 29 and 38, 29% and 29.3%. Um, a 5 to 10% rotation down makes a lot of sense to me. We're almost at 5%. We'd get to 50, 65, I think. Yeah, somewhere around there, 50, 66, 67. That'd mark 5%. And going down a little bit further towards the prior all-time high, that would give us 10%, right? 4,800-ish. So pretty much that old all-time high, somewhere around 4,800. So that's what I'm looking for. Is kind of 50, 65 to 4,800. I'm looking for that area to trade out. And the reason I would be a little bit more bearish than usual is just because the talking heads had a couple ideas, right? One was they missed out on getting long as we dipped into this consolidation. As we dipped in there, they missed out on getting long. They thought we're going to zero, and of course the market rips higher. We start breaking the all-time high. We break kind of this area, that's 4,500, 4,600 area. We break those summer highs, we break the all-time high. We keep ripping upwards. They think it's going to sell, doesn't sell, keeps on ripping upwards. So they have this idea of they're going to chase the laggards. Well, here are the laggards. Here's the Russell. And the Russell to me is the dumbest index because you are inherently buying things that are not doing well. If a index if the companies within the index do too well, they're kicked out because they're no longer a small cap. So uh, you're you're uh, you're letting your losers run. In other words, whereas the S&P, if a company's too poor, it gets kicked out. So anyway, the laggards or the Russell, just to make it easy, they're down 9%, I think. Yeah, 8.5%. Compared that to the ES, which is down, I think, 4% right now, 4.5. So the Russell is down double the amount as the ES. So that's the first thing, is that the laggards are behaving as we would expect. The people who got long the laggards are starting to feel some pain. Secondly, there's a large narrative out there still that people really want to buy the dip, and I mean, who would not want to buy the dip? I mean, look at this thing. We went so vertical since the end of October, so people are aggressively looking to buy the dip. And as long as that's the narrative, you gotta wonder if it's going to, if we will be seeing a more of a 7.5 to 10% sort of thing, maybe even more. I don't know, but buying it at 5% is a fairly aggressive move to me. So the laggards are lagging. The ES looks like we should be coming down 7.5% or so, something like that. It's not the end of the world. It's just a rotation down after 30% up. It's not. It's no big deal. Um, Thirdly, you have there was this big narrative that the recession is coming. The recession is coming. That's when everyone was talking about it at the lows. Evidently, it did not come. We ripped up, and that recession narrative has completely gone away. Meanwhile, the reality is that rate cuts are looking less and less likely throughout the year. Instead of, I think, 6 or 7 rate cuts being priced in, it's looking more likely that it'll be 0 to 3. In that case, if we were getting 0 to 3 rate cuts all year instead of 6 or 7 or whatever it was, it makes sense that the market should fall back a bit. So this is just a backdrop and sort of me rambling, getting my words out of my brain. Um, then I'm looking for a decent size drop here, 5%, 7.5%, something like that. Let's get into the actual charts and structure. This is a 4-hour chart here. It's pretty interesting. Every liquidation high. Here's a liquidation high. Here's one. here's one, here's one, here's the one today. We have not managed to break a liquidation high in a long, long time. That would be the last one that we broke back in the start of March. Secondly, we managed to get pretty much zero trade above the monthly open in April. And thirdly, we are now trading underneath the what was that, March, Feb? We're trading below the monthly high at 2350. Uh, that must be the February high, I suppose. We're trading below that, and you can see it's acting as resistance right now. Uh, so to me, we have a pretty clear break in structure. So how am I looking at it? Well, let's talk about this week. For the rest of this week, I'm interested in what kind of bid we get around 50.66. Clearly a balance of interest. Maybe we dip to 60 or something. Who knows? Let's call it 55 to 70. I'm interested in what happens there. That marks 5% down from the all-time high. That marks an important level. And as long as we're trading below, I would say 51.23, this prior balance high, as long as we're trading below there, it's pretty hard to be taking long trades, and I'm going to be really hesitant on doing so. Again, we have to see what sort of bid shows up around that 50.66 area, but to me, you're below that monthly high at 23s. 57s was clearly an important area, this kind of mid-50 area. Huge bid there. That's the monthly high, I think. Or sorry, not the monthly high, but a major swing high. So as long as we're around here, I have to be pretty aggressively short biased as long as we're trading below this area, right? It's just that's the lows of all of this inventory above us. In the event that we can start trading, in the event that we can start trading above 51.80, call it. So kind of this area of support, something like this. If we can get above kind of here, 70 to 80, perhaps then we can start looking at being a little bit less bearish. That was where we liquidated off of today as well. So that's how I'm looking at this thing, is that the background macro narrative, if you want to call it that, it justifies a rollover, and so does the market psychology, and so does the chart. So to me, what makes sense is to be a little bit hesitant on buying equities, on buying the indices during this drop. What would make sense to me is shorting the Russell, and maybe grabbing puts on the Russell while trying to buy up the S&P as it dips down, if you're interested in that. But day to day, week to week, I'm going to be pretty firmly short biased as long as we're trading below this kind of 51.23 to 51.60, call it. And only once we start getting above kind of 51.80 would I be a little bit more willing to go long on this thing. I mentioned it last week that the sellers, after this big liquidation day, the sellers had to hold kind of 47 to 57. That's where we ended up holding. That was the critical area. It's the same thing moving forward. We have to hold around 51.80, ideally 51.80 to kind of 47, call it. We'll see what we get. Anyway, that's my ramble. 8.5 minutes. I can never make these short. Hope that helps at least. Have a great rest of your afternoon, and hopefully you don't get liquidated.